huge day for Uber on Wall Street. 19 analysts initiating coverage of the ride-sharing stock today without a single sell rating, as the quiet period for underwriters of its IPO expired. Meanwhile, Lyft has just one sell rating, but the average analyst price target is 50 cents below its $72 IPO price, while Uber's average price target is $53.70, about 20% above its IPO price of $45. So which of these is the better trade? All I hear is they're totally different because Uber has so many of these other businesses.
Right.
Some people love that. Other people say these could be tough to run, too.
Well, it depends on who you listen to. Right. All those buy ratings out there. I was reading Deutsche Banks today who say actually this is their most interesting idea of an IPO since Facebook. And poses as much upside despite, remember, Facebook's shift to mobile. They say Uber's shift to margin expansion and profitability is a lot easier than the prospect Facebook faced at that point. So anyway, these are guys that are saying there's going to be some alleviation in the headwinds that come from this competitive pricing dynamic. So rationalization in the competitive dynamic, that margins get better, that they find their way to profitability. Right now, I don't see that. But that's what the market has to see, because structurally, otherwise, it's very difficult to get behind this story right now.
Yeah, I'm with you. I just don't see this path to profitability they're talking about. It seems to me there's not a lot of barriers to entries. They certainly have some kind of a platform and a network they can build. But at these valuations, with very little, very little moat around their business, to me, you might be bullish. These 20 out of 29 banks might be bullish. They're going to be bullish without BK.
But you like Bitcoin.
Yeah, of course I like Bitcoin.
Okay, all right. That makes sense.
Well, let me I agree with them on the business model. I find it, hard to really. The thing that, to me, that's amazing about this is, 19 analysts all come out. They all had the very same idea within a couple of dollars of each other. They all see the situation exactly the same way. How can that be? What else is really going on? So obviously, the underwriter group is, 19, however many big.
Who's left to get bullish?
Who's left to get bullish, or who doesn't want to have future business with Uber, right? So that's the part to me that just seems ridiculous. Forgetting even with the business model, it's how can you feel like, all right, I'm getting good advice from Wall Street when all of you are saying exactly the same thing?
My first thought was, okay, we saw the first earnings report. Nothing was different there. So between the underwriting, the first report, and now, what has changed about Uber that causes these guys all of a sudden, were they buys all the way? They were buys all the way from the IPO, I guess, because nothing's changed.
Well, they thought it was good at 45. If the 19 who did the underwriting thought it was good at 45, they got to like it here.
Right, you would think.
So if we play a game on this show, Joe, would you? By the way, I don't know what Bitcoin and Uber have to do. I mean, that was a bit of a non-sequitur.
No, because you said, there's no profits, there's no worth here. There's no way to evaluate what this is worth. I'm like, you like Bitcoin. What is that?
Well, it's completely different. And two,
I know,
Bitcoin,
I'm not saying it's the same.
Just so we know, just for the
facts. But you were making sense. It was,
and Bitcoin is the most successful startup that we've had in the last 10 years. It has no CEO, has no company, didn't raise money.
At 3,500, last time I was on, it was 3,500. You were so humble. You were like, well,
I actually think I said to buy it.
Okay.
Yeah, but whatever. We'll check the tape.
Guy, were you saying something?
What I was going to say was, we play a game on the show.
I love that game.
Rather, and although would you rather? So in this case, it would be Lyft or Uber. Right. And I would say Uber, and I'd say for this reason. I understand that Lyft has rallied 18% off the low, recently made $50 or so. But the fact that Lyft was actually down on this tape today off the back of that Uber note, to me, is everything you need to know about Lyft and maybe everything you need to know about Uber. Uber's actually traded relatively well since its IPO in this environment.
Well, why was the market up today, Joe?
It looked like a lot of short covering to me.
Well, and maybe it was very oversold. Look, my argument on Uber still remains, despite what I said, leave the fundamentals aside. Who needed to buy this stock at the IPO? Seriously, everybody needed to sell this stock at the IPO. Everyone who wanted to own Uber in the last 5 years, and this is the dynamic of the large liquid, in quotes, private equity market, which we now have, and Uber was out there for everybody.